Hello and welcome to LAT's Weekly Market Insights. This week, with a quiet economic calendar, we're going to focus in on a technical indicator. We're going to concentrate on the stochastics indicator, which can help us capitalize in sideways markets. Now, cable, since reaching the highs from back in February on the top of a channel, has moved and progressed into an hourly range, which has persisted for the majority of the week. Now, as we come across to that chart, we can see those multi-month highs back here from the 24th of February acting as resistance. We can also see this channel presenting itself a nice clear trend line with 4 or 5 touches across the top of this channel. We can also see how the price has been completely pegged between the round numbers here, clearly indicating the significance and importance of round numbers within our trading. That 142 and 141 round numbers acting as perfect support and resistance here on this chart. Now the question is, how can we capitalize in what is otherwise a very sideways market? And we're going to come down here into the hourly chart and we're going to have a look at our stochastics indicator. And what we've gone for here is a fast stochastic. We've gone for a 533. We could also change this up and look for a slow stochastic, which would be preferable settings of 1066. But here the 533 showing its importance, showing its worth. The red lines coming through here, the horizontal support and resistance. Those round numbers are 142 and 141. We also have clear primary resistance levels here, these black lines coming across here at the 142.20 region. Now for a stochastic to provide us with a clear signal, we need to be oversold. Ideally we need bullish or bearish divergence, and we need the crossover to give us the trigger to get into that position. But most importantly with this, we must be at a primary support or resistance level. Now as we make our way down and we find the first test down at this support region, the first element of bullish divergence comes into play. And we can see here as I add this line, and we'll thicken it up so we can see it nice and clearly. We can see here our lows across the bottom posting higher lows. The equivalent lows on the price here are lower, and when we get down towards this 141 region, we see it fail once, fail twice, fail 3 times at support before ultimately going on a bullish run to the top side. As we get up towards the highs, we see the same scenario repeat itself. We see these higher highs initially here on the price. Again, let's make that visible so we can see it. Now that is reflective of the price. So the price equal highs also getting higher. So that is not of interest to us. However, what is of interest to us is when we post the lower highs down through here. So we can see our stochastic now. I've got an overbought region above 80%, a lower high here being posted in at 87%, and the equivalent moves on our chart are a succession of higher highs, and this is bearish divergence, a discrepancy between the price and the indicator. The knock-on effect of this is a bearish outcome, and we see aggressive selling pressure come in after having a really nice shooting star formation posted at the top of this candle as the price breaks above and fails to close back below. We make our way back down towards the lows, again presenting ourselves with bullish divergence. If we just move this line across, we can see bullish divergence being posted as we have the higher lows on the stochastic and lower lows here on the price. However, importantly, we did not get back down to the primary support level, and therefore opportunities to have been long through here not on the cards. Unlike the opportunity to be long here and short up through here, we did not gain the primary confirmation, which is absolutely critical to be short in this market. As we continue our way through to that 142 region, we find ourselves in the overbought territory. However, we do not have bearish divergence. So despite the fact that we come into a lovely candlestick formation here of a dark cloud cover pattern, we do not have an opportunity to be short, and we miss out on what was a particularly nice short position. However, when we do finally make our way down to that 141, the round number, the primary support level, we are then given our next opportunity. And again, we'll move this line along. We see ourselves in the oversold region, down below 20%. And we can see our higher lows here being posted on our stochastic. Whilst we post higher lows on the stochastic, we have lower lows here on the price. And again, let's get that into a position where we can see it nice and clearly. There we are. Lower lows on the price, higher lows on the stochastic. The crossover here also coming in, triggering our buy signal. Just to confirm that, if the support level, the 141 round number, the bullish divergence, the oversold wasn't enough on the stochastic, like we got gifted a shooting star up at the highs here, we also were given a nice hammer formation as we popped our head below and then broke back up above that level, confirming the trend reversal. And this has repeated itself through to opportunities that presented themselves today. Much the same scenario. We see the stochastic here posting those lower highs in the overbought territory, suggesting potential reversal on the cards, and we saw a move back below this 142 before an excellent retest this morning. So trying to sell this market when we're up above this 142 region, unwise. Major resistance has just been broken in the form of that round number. However, what we then saw was a breakdown below, a retest of 142, and then this bearish engulfing pattern which teed us up for the selling pressure that we've seen over the previous 3 hours. Now, as we come through to the US Open, and we're now open, cash market open in the US, we're seeing a bit more positivity come out here in cable, but firmly still down, and at this point still adhering to stochastics and trading within this range. So whilst the market hasn't appeared to be doing much, there has been some excellent shorter term intraday positions using our stochastic indicator here designed for those sideways markets. So it's been an excellent week for stochastics, a great example here in cable, and a clear demonstration of how we can capitalize, we can make money, provided we have the right strategy to suit each and every market type. Please do join us same time next week for another weekly market insights.